Onto your markets news now. Asian markets closed mixed at the end of the week after a volatile week on global markets, while the Japanese yen managed to stabilize near a 12-week high against the US dollar. The Nikkei share average closed down 0.53%. The Hang Seng Index ended up 0.1%, while the Shanghai Composite Index ended up 0.14%. Over in the United States, markets continued their downward trend in Thursday trade, with the S&P 500 and Nasdaq the main drags. The losses followed on from a hammering of stock prices on Wednesday, led by the tech stocks. The Dow Jones Industrial Average rose by 0.2%. The S&P 500 declined by 0.51%, while the Nasdaq Composite closed down 0.93%. Locally, the JSE is green across the board today, with the all-share index up 1/3%, standing at around 80,970 index points. Taking a look at the currencies, the rand is trading at 18 rand 25 cents to the dollar, 23.49 against the pound, and 19.81 versus the euro. Gold is trading at around $2,373 an ounce, while platinum's trading at around $930 per ounce. Brent crude oil is hovering around $82 a barrel. Well, to break down the markets for us, I'm joined by Patrick Matidi. He's the head of multi-asset strategies at Aluwani Capital. Patrick, thank you so much for joining us. So it sounds like it's been quite a volatile week on the markets. Have the tech stocks really been overdone this year? Are they heading to a more realistic value, do you think?
Yeah, good afternoon, and thanks for having me. Yes, you are correct. I mean, we have seen the last few trading sessions, the market scrambling for direction. So we've just gone past the earnings season out of the US. So the companies are still profitable, in the tech space. But I think what's happening now is the market had very high expectations. So as and when they report and some of those earnings are below expectations, that's when we have seen a sell-off. Some will say it's profit-taking, given that they've done about 15% year to date, in dollar terms. I think an area where we are seeing strain is in the electric vehicle, as evidenced by Tesla's numbers. So Tesla is one of the largest producers of EVs across the world, and we are seeing them falling short of their own production guidance, which means that the market, for EVs is getting saturated with a lot of players coming on board. But also the US especially, which is the biggest market, the oil prices are very low. They've become self-sufficient. So, the switch between EVs and gas-fueled cars, it's no longer as compelling as perhaps, when the oil prices were about $125 per barrel.
Yeah. So in terms of sentiment going forward, we know that this year it's really been all about speculating around when interest rates are going to come down. And the market has seemingly been getting that wrong all the time. Everyone's hoping that come September, the US Fed is going to decrease rates. But of course, we're also now looking forward to seeing who's going to head into the White House. Which of these factors do you think is going to be influencing sentiment going forward?
I think for now, the interest rates path will dominate. I think a few days or weeks ago, certainly the White House race was also dominating. But I think now there's a bit of a two-horse race between the Deputy President and President Trump in terms of going into November. So I think for now, the market will focus on the fundamentals. We'll see, starting off with today, the private credit exchange numbers out of the US, if those are coming lower, which is a good indication of when we can expect rates. And so if the fundamentals continue to support a downward a trajectory when it comes to interest rates, I think the market will focus on that. But closer to elections around November, certainly the politics will come back to the fore, especially the noise around who's leading, who's not, and what it means for markets post one candidate versus the other.
Yeah. So unlike other markets, the South African market seems to be doing quite well today. We see that the local JSE as well as the rand is doing quite well. What do you think are the drivers for that? Is it just a blip, in this particular week? Or do you think that people are beginning to view South Africa as attractive again, given some of the political dynamics and so on?
No, I'd like to think that, but I think we're not quite there yet. We have not seen foreign participation come back onto our markets. I think the drivers continue to be local, with local investors. And it is fairly volatile. I mean, this time yesterday we're sitting at about 18.50 to the dollar on the currency, and now it's sort of 18.25. So the rand is also trying to find its feet, post the rally that we saw after the elections. And I think just like with the global world, fundamentals are back to the fore. We are also looking for the first rate cut out of the MPC. So thankfully, our inflation number also, it's stabilizing. It's not falling as quick as one would like. But thankfully, the MPC, when the last met, it seems like the language and the posturing is turning towards a rate cut, hopefully in September.
Yeah, I take your point. But when you do look at our local stock market, which has really been undervalued, are there any pockets, any particular sectors or particular stocks that you would be willing to bet on right now?
Look, it's getting a little bit tricky. So the so-called SA Inc. have run quite hard on the back of the outcome of the elections. I think for that trade to continue to yield good results, we need the structural reforms to come through. So the GNU is well intact, but it's still early days in terms of the impact on the economy. So I think the next leg up for the markets will be some positive developments when it comes to implementation of the growth reforms. But I do think, though, that in the meantime, there is pockets of value in the resources. So if you are brave and, given the strength of the rand, which has depressed a lot of the commodity stocks, I think in the fullness of time, you will come out looking well. So if you look at platinums, for example, and those continue to be hammered, some of the diversified miners, I think there, if you're very discerning and you pick your stocks very carefully, this time next year, you could be sitting pretty.
Okay, thank you so much, Patrick Matidi. He's the head of multi-asset strategies at Aluwani Capital.